Welcome to Breakfast with the Butler. If you live in the South or Western Suburbs, you probably saw the news. The second installment for property tax is due October 1st. Unfortunately, for many homeowners, this means an immediate price increase into their monthly payments because of escrow shortages. Let's start by addressing the communities from Orland Park all the way down to Harvey and why they're opening up their tax bills and they are completely shocked by the letters that they're seeing. All right, so property taxes are due October 1st. And unfortunately, the western and south suburbs of Cook County was hit on the reassessment cycle this year, which drastically improved property values, spiking property tax. Now, this normally happens every 2 years. It's just our turn to take the hit. And here's where it hits your bank account the most every month. It's the escrow spike. All right, so most homeowners have a standard mortgage account, which also means that your lender takes a piece of your mortgage and pays your property tax every month. But when reassessments happen, two things happen simultaneously. All right, so the first thing is the escrow shortage. The lender has to pay the county more than what you've saved in that escrow account, leaving a deficit, which can be tremendous or just a little bit. But either way, there's going to be a deficit. And then comes the adjustment. The bank have to recalculate your mortgage payments with the new tax rate, as well as let you know how much more you have to pay just to cover that deficit that's in the escrow account. So when this happens, obviously you're paying an extra thousands of dollars each month. But more importantly, your monthly mortgage will go up. And overnight, this can be anywhere from $200 to $600, which can be detrimental to families that's living paycheck to paycheck or struggling in this incredibly difficult economy right now. Today, I'm going to be giving you guys some solutions, and hopefully this is some valuable information that will allow you to navigate through this process of this reassessment. If you're staring at that payment increase letter right now that you simply cannot afford, watch this video all the way through because I'm about to drop some nuggets. All right, so the very first step is to go to the Cook County Assessor's Office. I will link a link down below so you guys can go check. But you go to this website and you make sure that you are getting all of the exemptions that you are eligible for. This is a regular homeowner's exemption. This is a senior exemption. This is a senior freeze if applicable. There are veteran exemptions if you have not filed it, if you are a veteran, if you are wounded. Now, these exemptions can save you hundreds of dollars each month, and sometimes they fall off. For instance, if you've been in your home for 5 years and you've been getting it since 2021, sometimes it falls off, so make sure it did not fall off, and it can be adjusted before the October 1st date. All right, so if you're already past that point, you could file an appeal. Now, the appeal won't stop the October 1st date, but it can stop next year's tax bill from coming out, and you will be eligible for those exemptions next year, but it will not stop the one, unfortunately, for October 1st. All right, second option is to call your lender directly and let them know the situation that you're going through. Now, most lenders will be more than happy to entertain the thought of spreading that deficit over the next 12 to 24 months, but it's a conversation that you need to have. And what if you're saying to yourself now, Chevy, these numbers simply don't work? Unfortunately, the tax increase has made it impossible for me to keep this house. Unfortunately, this is a reality for a lot of people. And This is where traditional real estate fails. Depending on your specific situation, putting your house on the market and doing what we call a fast sell or quick sell may be an option for you. If you have equity that's built into the house, this can be a very good solution for you to move somewhere where it's a bit more affordable, either Will County or parts of Northwest Indiana may have a lot more cheaper taxes and affordable housing compared to Cook County. You also have to consider that you are essentially planning to move before the end of the year. This will be a quick sale, so we have to make sure you have enough equity to cover commissions and possible repairs if necessary. Now, if you have a low interest rate, 3, 4, 4.5%, then you are a unicorn. And you have a lot of different options when it comes to selling your home, including the ones we just talked about, and also creative, right? So it's called creative financing. This is essentially where an investor or a regular buyer will come and take over that low interest rate. You will get a down payment or whatever's agreed upon amount of money to essentially give up your home and move to somewhere new as they take over the payments and become the new owner of the property. Now, just to be clear, that mortgage, the actual mortgage, will stay in your name and they will make monthly payments as it builds your credit. In return, they get the deed to the property and they get to live in the property, or if it's an investor, they will put a form of a tenant in there to make sure those payments are being made. And it is protected by you, the seller, by having a lien on the property, which means they cannot do anything until the property is paid off, as far as like selling the property or anything like that. Now, depending on either one of those solutions that I just gave you, either creative or traditionally, that down payment or the equity that you got from selling your home will allow you to move again somewhere more affordable, either Will County or Northwest Indiana, which is right over the border, where the tax burdens are significantly lower. And just for transparency, if you were thinking about the second option of selling your home sub 2 creatively, that mortgage will still be in your name. So your debt to income ratio may be a factor on you purchasing a new home, but you can always rent depending on your situation. Lake County, Indiana, which is primarily Northwest Indiana, has an average tax of a medium home price of around $1,400 compared to Cook County, which is around $6,200 per year for median home prices. If you are in this specific situation of this tax spike affecting you and your livelihood, feel free to reach out. I'm here to help. Let's go over some regular and creative solutions to get you out clean, protect your credit, protect your equity, and move forward equitably. Thank you for tuning in to today's episode of Breakfast with the Butler, and I'll see you guys on the next video.